You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
All right, everybody. That music can mean only one thing. It is Education Wednesday. It is time once again for Options Playbook Radio, the program that breaks down all of the universe of options trading into cool offensive and defensive plays that you could utilize in your own portfolio. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever compelling, at least we think so, Options Insider Radio Network. And if you're saying to yourself, he's not the author of the titular Options Playbook, I would say you are correct. So allow me to introduce the guy who wrote it, a.k.a. the options guy himself, Mr. Brian Overby, a.k.a. the senior options analyst over there at Ally Invest. A lot of AKAs in your name, Brian. Welcome back to your own show, sir.
Well, it's great to be back, Mark, as always. We don't do enough of these listener question and answer events, and I love it when we do. So let's take the time today and huddle up.
It's time to huddle up and answer questions about your favorite options plays. Submit your questions via twitter.com/options, facebook.com/theoptionsinsider, or questions at theoptionsinsider.com.
All right, everybody, welcome to the huddle. Let's see how many of you we could squeeze onto the program today. And this first one, Brian, is a timely one. Pun intended here, because someone's got a question about time. In particular, TST wants to know, what are Brian's thoughts on time spreads? I noticed that he rarely utilizes them in his options playbook trades. Is he not a fan, or is there another reason? And Brian, I say this is timely because, little glimpse behind the scenes, listeners, we just recorded an episode of OPR with Brian, and he talked all about time spreads. So, Brian, this is a very timely question to beat that pun to death, sir. What do you have to say here for TST? Why do you hate time spreads so much?
Well, hate is a strong word. I just like time spreads when it's timely. So when I'm looking at time spreads overall, as we did with Disney, I think that will be posted as of last week. I always like to do them around earnings. The biggest thing about time spreads is trying to get implied volatility, your thoughts on implied volatility correct. And there's one time, or I should say 4 times of the year, where it's fairly easy to do on individual stocks, and that's around earnings. We know that around earnings, the implied volatility on an underlying stock that contains that earnings is going to probably increase. And that makes it very easy to look at time spreads or diagonal spreads, because it kind of takes that component out of it. I don't necessarily have to be right on the price and implied volatility because I know implied volatility is going to go up. So I usually only talk about them around earnings. And unless it's an index, I don't do a lot of them on indexes, and I don't mind them on indexes. They're a different beast overall. But on underlying individual stocks, I only like to do them around earnings.
Well, there you go, TST. He doesn't hate time spreads. He just has to have the right time to use a time spread. And it's around earnings season, which happens to be now. We're kicking off a new season, a new cycle. This is probably why we have so many earnings-related questions here, Brian. Next up, we've got Theodore. Good old Theodore. He wants to know, hello. Well, hello, Theodore. So polite they are. Says, big fan of Education Wednesday, especially OPR. Right back at you. He says, I would like to ask Brian what his favorite approach is to trading options during earnings season. Well, Brian, you kind of just laid out the time spread, your new favorite trade, if I do say so myself, aside from the time spread, or maybe including the time spread. What is your, as he puts it, your favorite approach to trading options during earnings season?
Well, in general, you got to be speculative, right? If you're trading around earnings, you are definitely trading the news. I mean, because you can have situations where earnings are great and the stock goes down, buy the rumor, sell the news type scenarios overall. So if I'm doing it, one of my favorite things, I guess, to do, and I've done it quite often on Options Playbook Radio, is where I manage my risk using a spread. In that I buy, if I'm going to be bullish on the earnings, I will go equidistant in and out of the money, and I'll buy a little bit in the money call and sell a little bit out of the money call. For example, if it would be 5 points wide, I want to pay $250 for it. That way, I basically got a coin toss. If the market goes up, I'm going to make $250. If the market goes down, I'm going to lose $250. And I like to manage my risk that way. So I can also take the approach, well, I think it might go up, but it might go up a lot. So in that instance, on a 5 point wide spread, well, I might try to pay $2 or maybe $1.50 to make 3 or 3.5, depending on my level of bullish or bearishness overall. So very short term when I'm doing it only because of the earning. So if they're announcing earnings on a Tuesday, I'm going to use that Friday expiration, for example. That's the way that I would approach it. And because it's pure speculation and it's truly a coin toss, because as I said, a lot of times you have no idea, even if the earnings are considered a good report, that the underlying market is going to go up or down if it's a bad report, et cetera, et cetera. So that's my simple way to approach it. Overall, I have some other different ways to look at trades. And, one of them we just talked about is, the calendar trade, of course, and just other things that are okay with a decrease in implied volatility after earnings. Butterflies are interesting too. So that would be, I guess I'm getting a little bit long-winded. I'd say my favorite trade to do is a spread on the short term and manage my risk versus reward with the spread, because it's usually just an all or nothing type trade.
All right. More earnings stuff coming up right at you here, Brian. Next up, we got Patrick. He wants to know, if I want to buy an option during earnings season, should I buy it early or right before the announcement? So kind of the old question, Brian, of when do you dive into those waters, sir? Right before the announcement or a little bit earlier?
Well, I kind of answered that by the last question, in that I really don't like to buy options going into earnings. If I'm going to do it, I will usually spread it in some way, shape, or form. But with that said, I talked about on the stock play of the day, which is on the Ally YouTube channel. We post that every Tuesday, and the recordings are available. Last week, I talked about earnings on the financial companies and how I would approach them. And in that session, which is about a half hour long, I discussed the fact that I would like to wait for earnings to be done and then buy a deeper in the money option contract as a surrogate for the stock. Because I like to buy them afterwards, because implied volatility comes off on a sector that I'm bullish on, or bearish if I want to buy in the money puts. But based off of what my forecast is for that sector, I'd like to do it after earnings in general. So if you'd like to get a little bit longer, more detailed answer as to why on that, just go back and look at the Ally YouTube channel.
There you go. Ally YouTube channel for a more in-depth question here. Next up, getting away from earnings for a second here, Brian. This one came in. I wasn't sure if it was a joke at first or not. It comes from Colin Gilchrist. He sent it in to this and to one of our other shows that the sister show on Education Wednesday, which is our Options Bootcamp program. He says, "Hi guys, I've been working my way through Options Bootcamp and loving the show. I found Dan's books, Dan Passarelli, he's my co-host on that program, on Amazon and added them to the old wish list. Are there other books that you guys would recommend?" And this is why I wasn't sure if he was serious or not. He says, "I'm looking for a playbook style book, so I have a basic rule structure for my trades. There are a lot of, quote, option playbook style books." Are there? I didn't realize that. "But I am curious which you would recommend, as I am sure there are a lot of books with questionable quality. Thanks, guys. Keep up the good work." Brian, would you happen to know of any options playbook style books that you could potentially recommend to our friend Colin here?
Well, obviously, let's go with the options playbook. And I always want people to know, because I see things like this. If you just like to check out the playbook, I mean, one of the biggest things that we did here at Ally Invest is that we never really wrote the book to try to sell the book overall. So we give every word of the options playbook away at optionsplaybook.com. So you're getting the exact same content that you would get from the book. We still get a lot of people that want to buy the book, though, and I kind of get it, because it's a book that you can lay flat and you can take notes on it. And so we do get a lot of people that double dip, that like to go to the website and then also keep their options playbook sitting right next to their computer overall. So definitely my recommendation for Colin would be to buy the options playbook.
I didn't realize that was a crowded marketplace, Brian, of a legion of options playbooks out there. I had no idea there were so many competitors to your throne. He's confused by there's so many choices in the realm of options playbook. Yes, Colin, I would definitely heartily recommend you go after the titular book upon which this show is based, the options playbook. It's a good one. I could recommend that one if you want the quote unquote playbook style of breakdown for your options trade. As Brian mentioned, you don't even have to pick up the book if you don't want. Optionsplaybook.com. Also a great place to go. Speaking of going, Brian, we got to get the heck out of here. But before we go, you kind of mentioned places that people can go to get more content in between episodes, your YouTube channel, the Options Playbook. Why don't you hit them again? Where can they go for more of your content in between episodes, sir?
Well, the easiest place to find content, because anytime I'm doing content on that day, is on Twitter. So I tweet quite a bit. I'm tweeting even more nowadays than I used to in the past. So anytime we have an educational event that's not our podcast, Options Playbook Radio, but has anything to do with digital conferences, things that we're doing at Ally Invest, I will always tweet about them. My handle is @BrianOverby. You can send me questions if you would like to find out more about what's available through Ally Invest educationally. Send them to theoptionsguy@invest.ally.com. And I want to say, Mark, thanks for hosting, and to all of our listeners out there, thanks for listening. We'll be back at the same time, same place next week. And until then, may all the options you bought finish in the money, and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.